Namaskar and welcome to our series of programs on the economy. Today we'll be looking at whether the Indian economy is poised for recovery. We'll be looking at indicators presented in the July bulletin of the Reserve Bank of India, which are very positive. Talking us through this discussion, we have with us Dr. Shekhar Tomar, economist, assistant professor at the Indian School of Business. His interests are trade, macroeconomics, development, network, agricultural economics. He's a former research economist at the Reserve Bank of India. He earned his PhD from the Toulouse School of Economics in France and his master's in economics from the Delhi School of Economics. Dr. Charan Singh is the chief executive of eGrow Foundation. He was the RBI chair professor at the Indian Institute of Management, Bangalore, between December 2012 and December 2016. He served as a senior economist at the International Monetary Fund in Washington, D.C. from August 2009 to November 2012. He was the research director at the RBI from 1997 to 2009. He earned his doctorate in economics from the University of New South Wales, Sydney, Australia, and his expertise is in monetary policy and banking, international trade, and economic reforms. The RBI July bulletin, it specified that digital transactions are strong, which have benefited from the infrastructure which was built up in the last 12 months. So the question that comes to mind is, why is this important? Why are these digital transactions important in the recovery?
All the efforts that have been done in the past, since 1945, before independence, we have not been able to track where the money comes and goes, and there's massive tax evasion and tax avoidance. Once you have a digital stamp, it becomes far more easier to know where the money is moving and how it is flowing. It helps the policymaker. It also helps the fiscal authority to collect taxes. It also helps the monetary authority to decide and devise tools, techniques, instruments which can benefit the common man. The payment banks, the small banks, they play an important role. And how did we know that these are important? Because there was a study done which shows that the remittances from major metropolitan cities to places from where the auto rickshaw drivers and all those come to Bombay, then you start thinking in terms of these tools, techniques, and instruments. So I'm very happy that the digital payment system is improving. In the meantime, the country has also done a lot. Just about 10 years back, how many of the platforms did we have? But now we have all types of platforms, the Beam, the Paytm doing very well, the UPI doing very well. So therefore, once the utilization of an instrument improves, the competition sets in, improvement in the quality of the products that are offered to the masses also happens. So I'm very happy that the digital transactions are rising in the country.
Dr. Tomar, would you like to add something to this in terms of, the tailwinds in digital transactions, why they mean something in terms of the revival of the economy?
So the way I think of it, it's especially relevant in the case of COVID. It kind of means that we are adopting new technology. We are learning to cope with COVID. So of course, vaccination is one of the strategies to overcome the pandemic, but businesses also have to learn. And this switch to modern technologies, it really helps because it shows that businesses are moving to more advanced technology. And it's also important from another perspective, which is we should know that a lot of our population is unbanked or not formally connected to the financial sector. So it also means that we are leapfrogging in some sense by directly jumping to more advanced technologies.
Indeed, and Dr. Tomar, the 27 Indicator Economic Activity Index, the EAI, it estimates that real GDP will register a growth of 22.1% from April to June quarter. Is this enough to, predict a broad-based recovery?
So there are two issues here because we saw the second wave during this time period and there are some revised estimates which are coming in. So my sense is it might be slightly lower than that. The other point is that there is also some base effect because if you remember Q1 of last year, we saw one of the largest contractions. So we were expecting a growth over there. So from that perspective, yeah, it's a recovery in the sense that we have lost some ground last year, which we are recovering this year. But I think the way to think about it is that vaccinations are finally picking up in the country. Plus, there is some momentum building up, so which would, in the end, translate into higher economic growth later on.
The revival of landings of capital goods, raw materials from abroad, up to early July 2021 indicated that the wheels of domestic industry are picking up. A dynamic macroeconomic situation in the country. That's what the RBI report says. Do you agree with this?
Of course, of course. The reason is very simple. The slowdown that we have noticed in the economy in the last 2 years is not because there is anything impairment of labor or capital or technology. What has basically happened is the virus has come and the economy had to be closed artificially. So sort of a lockdown has happened. Obviously, there is pent-up demand and there is good amount of labor available and capital available. Moment it opens up, it's going to bounce back. There is labor waiting, raring to go, and there's capital underutilized. Now, the point that you are making is so relevant and so important. We in the country are now globally integrated. Nearly 25% of our production is in terms of imports and exports. If you add them as trade to GDP, we are nearly 25%. Now, in advanced countries where vaccination has already taken place and they're opening up, they're not even using the masks anymore. The demand for our products is starting to rise. So our exports are improving. So exports are also driving a big role, playing a very big role. Within the country too, in the rural areas, in the cities, the automobiles are doing very well. And construction is also doing very well. And if I was looking at the inflationary trend in housing and all, yes, there is little restriction. But then I was speaking to some people in the housing sector, the builders and research institutions, if there has been a massive correction in the prices of houses, not really. So that means there is sustainable demand. There are people sitting with the purchasing power and they're just waiting for the economy to open up.
And Dr. Tomar, you track the real estate sector quite closely, and there's also an indicator of housing that that the ISB has worked on. So, do you feel that there is a lot of demand in the housing sector?
So there is partially, I would say, there was pickup in the demand in the last quarter of the financial year. So we saw an uptick in the demand going up until March and even until April. But then there was a sharp revision again because of the second wave, and we see that at least the sold houses, they went down at the same level like last year. But then we have to wait and see like how it picks up. But as Dr. Singh mentioned, that there hasn't been a lot of correction on the prices side, which means that both the builders and the households are expecting that the prices are going to remain firm and probably go up in the near future, which means that there is a lot of demand, which will again come back to the market. Once again, because of low sales in the last month, but also because of expectation about higher prices in the future.
2/3 of net foreign capital inflows received by India in Q4 were absorbed domestically. Now, for the ordinary man, what does this mean? I mean, is this something to do with imports picking up and domestic manufacturing improving? What does this mean, sir?
It essentially means whether the money which is coming up from abroad, whether that is invested or not. So a lot of times the capital can come in, but it would sit idle. And in that case, you don't know whether it has actually led to any productive capability building or not. So in this case, we have seen, or at least that's what the RBI report says, that the FDI, which has come in the past quarters, it has really gone into increasing our manufacturing capability. And I would add one point to the previous point, which you were talking about, that our imports have gone up, and specifically the imports, the capital good imports have gone up. So I think within the last 2-3 years, that is actually the most shining case, I would say, that the capital goods which actually help manufacturing capability, those imports have gone up. And so what we would see is the result of these improvements in the next 6 to 8 months. So don't expect anything right away, but it really means that we will see some impact down the road.
There's been severe criticism in Delhi and in media and everywhere about the Central Vista thing that is being done. Now, you will be surprised to know construction is one activity which has interlinkages with about 275 other industries. Now, when the economy is down and low, and the government has to increase its expenditure to create employment, and if it does certain activities through which 275 odd industries get an impetus, what better can you ask for? I am of the view, given that steel and cement is doing well, I am of the view that even in other parts of the country, state capitals, if you know about Sydney and Canberra, and look at the beautiful state capital that they built, that state capital at Canberra is just not a piece of beauty. It's created lots of employment and generated lots of activity. In this recovery phase of the pandemic, if other states can also do such, identify such constructive activities which make Indians proud and which creates assets for the country, it creates employment and it creates activity in other industries, I think that is what I would recommend to the government in view of the real estate and construction activity, the question that you were asking.
What do you see? I mean, the remittances that have continued to come in from abroad. What does this mean, actually? How do you assess it in terms of the Indian economy?
The country is robust. The demographics is solid. The regulators that the country has are very, very good and globally recognized to be very good as supervisors and regulators. The stock market is doing very well, actually giving better returns than the rest of the world. Now, in view of the strength of the country, why would remittances not come back? Not only remittances will come back and come to India in large numbers, as you would have seen, and again links up to the previous question, the foreign institutional investors and the foreign direct investment is also doing very well. Indeed. That is basically a reflection of the strength of the country, and given the midst of all that crisis that we have been, please remember, whatever be the tax to GDP ratio, whatever be the low tax, but the government has come out consistently last year with packages to sustain the economy and all sectors of the economy. And even this year, during the second wave, the finance minister again came out with a program which was also very, very all-encompassing and very innovative. Now, given this background, it is obvious that the country will be an attractive attraction to others as well as our own people who send remittances.
Dr. Tomar, would you agree with this in terms of the FDI inflows that are coming in? Because the United Nations Conference on Trade and Development in its investment report 2021 revealed that India was the 5th largest recipient of FDI in the world in 2020. And, one presumes that it's only going to be better this year.
So FDI is somewhere around 2% of our GDP right now, and I expect it to grow more in the coming years. And one of the reasons to think about it positively is that it's really talking about the long-term future of Indian economy. So of course, COVID will come and go. And I mean, although we know that we are suffering from it for a year now, but in the grand scheme of things, it's going to be a small period of time. So from that perspective, when FDI comes in, it's looking at 5 or 10-year horizon in terms of returns. So which means that the world is looking at India as a long-term investment player, and the returns are going to be larger in that sense. And so I don't see that unless we really falter on vaccination and we really falter in the short run, it's going to have an impact. I think it's only going to be more robust going forward, given that our vaccinations have picked up and even the short-term hiccups seem to be going away now.
Let's look at aggregate demand conditions in the country. They are recovering, spurred by the unlock measures. But the indicators that the RBI is looking at are e-way bill collections, toll collections, fuel consumption going up, except for ATF, that is the aviation turbine fuel. But automobile sales also are reasonably high at 82% of what they were, in pre-COVID days. So things are looking bright as far as all these are concerned. What do you think? I mean, is this going to be sustained?
I am totally in agreement that this is going to be sustained, because I always kept saying that there's nothing fundamentally wrong within the country. We have been hit by a virus which has come from outside. We are fighting it tooth and nail collectively, though we may have a setback in the second wave, but the first wave we rode it very well. While for the third wave we are ready. Whatever said and done, it's a calamity that has happened once in 100 years. We are facing it squarely. But the fundamentals are strong. The demographics is there. Income levels have been sustained at many places. Yes, in the unorganized sector there has been a hit. Luckily, very fortunately, monsoon has been very good. And because monsoon has been very good, our sowing in the agriculture sector, which sustains nearly 2/3 of the population, is also going very well. Now, it is obvious that sometimes the kharif crop, which is the sugarcane and the rice, it needs less water, less rainwater.
Okay.
So therefore, if there's a deficient rain, it doesn't really worry me. But point that I'm trying to make is that the trends in these countries, the economic trends in the country are robust and strong. And these are available, as you mentioned, if you look at the various indicators, be it two-wheel motorcycles in the rural areas, be it the tractor sale, be it the automobile sale in the urban areas, they're all looking up. As I mentioned in the housing sector also, there's not been much correction. So therefore, there is sustenance of demand. And once the economy opens up, once vaccination is done, about 40% of the country is vaccinated, and there's a slowdown, there's opening of the lockdown, you will find that the economy will boomerang again. That's why the 22.1% growth rate, which is going to be among the largest, the base is low, but then it's a very good growth rate.
Okay. Dr. Tomar, your expertise is also in agriculture, so perhaps, you can weigh in on that question as far as, the agricultural demand is concerned.
The second wave has been slightly different, at least in some parts of the country. But as Dr. Singh mentioned, that monsoon has been a little bit delayed, but it seems to be that we are going to do okay in terms of the sowing, as well as also in terms of the total production this year. There's also another thing that, at least in the rural areas, we are seeing that the MNREGA pickup has not been so high, which means that probably people are able to find employment within the agriculture sector itself. And that's why they're not taking up Manrega jobs right away. So it all kind of shows that the rural economy is doing okay. And also I think on the unemployment front, the rural economy is showing much better figures relative to the urban centers.
Taking off from what Dr. Tomar says about MR Manrega, that they are probably finding jobs, they are being absorbed into the real economy. How does you think the employment outlook is? The rate improved to 9.17% in June from a 12-month high of 11.9% in May.
Yes, my own gut feeling is with improvement in exports taking place and the rest of the world doing better and demanding India's exports, you will find that employment figures will certainly go up. I'm also happy to note, and I have mentioned it earlier also, that the schemes that the government has announced are also going a long way in sustaining employment. One scheme that I have in mind, and if you don't mind, I just would like to give this illustration. If I have to set up an industry which is automotive, lots of crores of rupees go, employment is in terms of 10 or 100 people, and so much money sinks in. On the other hand, if I go with the government schemes like the Mudra scheme, or scheme for the headload workers, or scheme for small entrepreneurs. Now just imagine a person who's building sculptures for the puja. Now he just needs 10,000 rupees to buy some clay and some paint, but he needs a worker to mix it, and he needs somebody to market his product. In 10,000 rupees, you create 3 jobs. Similarly, we can identify many other such skills in the village and cottage industry in our country. They will keep people engaged. Now, one thing which I want to just mention here is, when we want employment to increase, the purpose is just not purchasing power in their hand, the purpose is also keeping their mind engaged. If you put purchasing power in the hands of people, as some were arguing, print money and just distribute it to the people, it can be dangerous. There's an example of Punjab, where you had people who had lots of money, but did not have productive activity, economic activity to stay engaged in. if the mind is not fully engaged, it can become it can lead to things like modest activities or drugs. So therefore, it's important in terms of employment generation that economic activity which engages the worker is necessary. And that I think village and cottage industry has lots of potential, and Mudra loans is the way to create that employment.
Dr. Tomar, if we move into the exports segment, merchandise exports surpassed US dollars 30 billion for the fourth consecutive month in June 2021, and non-oil exports have been in positive territory for 10 consecutive months now. The expansion is broad-based according to the RBI. 25 out of 30 major commodity groups are picking up. So what does this indicate in terms of the global competitiveness of our country?
So generally, in terms of competitiveness, you need a little bit longer time to analyze whether it has really changed or not. And I think export-linked incentive scheme maybe probably help us there. But the recovery that we are seeing right now, I would think that it's primarily driven by three factors. So one is the base effect, which I don't want to talk about because we mention it all the time. Last year was bad, so this year is good. So that's out of the picture. The second is vaccination picking up in all the advanced economies, which means that the demand for our goods are going to rise over there. So vaccination is really helping over there. And then the third point is the rising commodity prices in general across the world, which is also pushing up the prices for some of the manufacturing goods. So I think this third factor is really important and which we should keep in mind, because it means that, okay, we are exporting more, but some part of it is explained by the increase in prices. So we are not just selling more goods, but there's also has been an increase in prices. So there we have to be a little bit cautious. But overall, it seems that exports have picked up in the last few months. And the good part is, as you mentioned, that it's broad-based. We see it across the set of commodities and products we are exporting.
Input costs seem to be going up. And that's reflected by PMIs, registered increase in June across manufacturing and services. So this is inflation. And I mean, what do you consider? Is this something that is the only concern right now? And what do you foresee in terms of the impact on monetary policy as well as on growth?
So this is where it connects really to the international economy, overall speaking, and there has been some movement over there. And as I mentioned just before that, the commodity prices have been going up, which also shows up in our wholesale price index. So it has been in two digits for a while, for last 3 months. And the gap between the WPI and CPI has been around 6%, which is the largest in the recent period. And where it's coming from, it's essentially coming from this increase in commodity prices across the world, which have increased by around 20 to 30% for most commodities in general. What it means for the central bank and the monetary policy in general is to keep like a clear focus on the inflation targeting. Although inflation is just above 6%, the RBI target right now, but we have to be careful going forward. Because there might be spillover from the WPI to the CPI if it persists over a long period. And of course, it would also depend on the international policy, how the Fed is going to behave. And I guess it's a discussion in itself, how the Fed policy is going to affect the commodity prices. But I think given that, and I'm going to end on a positive note here in the sense that our fiscal position is okay. We haven't splurged too much. So we are good in that sense. And the second part is, even if there is volatility in the international market, RBI is sitting on a war chest of reserves, which recently has been above 600 billion. So I think in that sense, we would be cushioned against these international volatility in prices and maybe even in the exchange rate.
One thing which I would like to mention that yes, the foreign exchange reserves of our country are 600 billion plus, which is very good. But you know, they have not to be seen in terms of US dollars. They have to be seen relatively with something. And what is the best way to look at is the import cover. So they are still around 16, 17 months of import cover. But please remember the import and export are now low. And therefore, if they go back to their normal level, we'll be just around 12 months of import cover. That to my mind is not a very robust figure, because the rating agencies and the speculators, they always look at these and then they hit the currency. So I would expect once the export import are normalized, then about 18 months of import cover is something which we should maintain. That's where I would be. So I don't think I would like to use the foreign exchange reserves right now. As far as the inflationary figures are concerned, I am of the view the situation that we are in, inflation targeting should not have been pursued at all, because growth is most important. This is the youngest country in the world. People are sitting there in large numbers, especially the youth, and therefore they've just graduated and they're waiting for the jobs and they want to get absorbed into the labor market. And the youth is not immediately absorbed because they're young, they can be impulsive, there can be social crimes which can rise. So therefore, inflation is not worrying me at all. What is worrying me is to create enough jobs and employment, economic activity that engages the youth. And that is where I think the government has also been announcing its policies and asking the banking authorities to lend to people, to MSMEs and the Mudra loans, so that we are able to create that growth. I think that's where the focus should be.
We leave it there. Thank you very much, Dr. Charan Singh and Dr. Shekhar Tomar, for being with us and enlightening us on the subject of the economic recovery as indicated in the July bulletin of the RBI. Thanks for being with us. Namaskar.
Thank you.